Welcome to today's Explainer. We're laying down what I like to call the absolute ultimate beginner's curriculum for the stock market. If you've ever stared at a financial chart, watched those numbers frantically flashing red and green and just thought, how does any of this actually work? Well, you are in exactly the right place. We're going to build your knowledge up from absolute zero. Breaking down these core technical concepts properly is just absolutely crucial because having a rock-solid foundation is literally everything in this space. So let's not waste a single second. Let's get right into it. We're going to start things off right away with a massive reality check straight from our source material. Beginners can lose money quickly. Honestly, there is absolutely no reliable way to make guaranteed money from trading. Zero. None. If anybody tries to tell you otherwise, they are lying to your face. The market is just totally unforgiving to anyone who jumps in unprepared. We're starting with this harsh truth because respecting that danger, that's your very first step to actually surviving out there. So, to get you through all this safely, here is our roadmap for this explainer. We'll cover the reality of trading, map out our beginner learning path, compare investing versus trading, explore simulating with paper trading, drill down into essential risk management, and wrap up by learning how to avoid some common trading scams. Starting with Section 1, the reality of trading, understanding the basics. When you strip away all the crazy financial jargon and the noise, trading simply means buying and selling assets, like stocks, to try to profit from price changes. That is the whole shebang right there. You're looking at an asset, you acquire it, and you're hoping the price moves in a direction that lets you sell it for more than you paid. But the absolute key word here is try. You are trying to profit. Because you're relying on price changes in a super unpredictable market, it carries massive inherent danger. The goal is always profit, but the reality is risk. Moving right along to Section 2, the beginner learning path, your required syllabus. Because of that inherent risk we just talked about, we need a plan, and this is especially crucial if you happen to be under 18. The absolute safest approach, honestly the mandatory approach, is to focus purely on learning first, long before you ever risk real capital. You have to master this technical vocabulary. First, what is a stock? It's quite literally a tiny slice of ownership in a real-world company. Next up, exchanges. These are just the massive digital marketplaces where buyers and sellers actually meet up to trade those little slices of ownership. Then we get to the actual mechanics of buying. You have got to know the difference between a market order and a limit order. A market order is basically you yelling, "I want this right now," and you just accept whatever the current price is in the marketplace that exact second. A limit order, much more defensive. It's kind of like haggling for a car. You set a strict maximum price you are willing to pay, and your order only goes through if a seller matches your exact price. Finally, you have to know how to calculate your profit and loss, recognize the true nature of risk, and really grasp diversification. Diversification is just that age-old wisdom of not putting all your financial eggs in one single basket. Listen, if you don't fully understand every single one of these concepts, you have no business risking a penny. Master this syllabus first. All right, Section 3, investing versus trading, knowing the difference. We need to contrast these two approaches directly, mostly because people use the words interchangeably all the time, and it's a huge mistake. Investing is a long-term approach. It generally involves holding on to your investments for years. Think of, buying shares in a solid company and just holding them until you retire, to build wealth slowly. Trading, on the other hand, involves way more frequent buying and selling. We're talking about buying a stock only to sell it 10 minutes later, or maybe 2 days later, just for a quick buck. And because you're constantly jumping in and out, trying to time short-term price changes, trading is usually much, much riskier. You really got to ask yourself which game you are trying to play here, because the required attention and the risk exposure are completely different beasts. Let's hit Section 4, simulating with paper trading, the sandbox. Okay, so once you actually know the vocabulary and you understand the risk, how do you practice without ruining your life? You use a sandbox. Paper trading is exactly what it sounds like. Historically, it was done on paper, but today it's a digital simulator account. You are trading with live, real-time market data, but you aren't risking any real money. It's a totally risk-free environment. Practicing with a simulator is a mandatory phase before you ever open a live account. It's the perfect place to test out those market and limit orders we talked about a minute ago. Trust me, you want to press the wrong button and make a mistake here, where it just costs you fake digital currency rather than in the live market where a silly typo costs your actual life savings. Section 5, Essential Risk Management, playing defense. Listen to me carefully here. Defense is just as important, if not way more important, than offense in the stock market. Here is your strict survival framework.
Step 1. Never assume a trade will make money. The second you assume a win, you drop your guard and you completely ignore the danger. Step 2. Don't borrow money to trade. Just don't ever do it. Borrowing money amplifies your losses and it can throw you into a catastrophic financial hole where you owe money you simply do not have. Step 3. Start only with money you can afford to lose. Think about this really practically. If losing the cash in your trading account means you can't pay your rent next week or you can't buy groceries, you are risking entirely too much. Write these rules down, memorize them, follow them flawlessly.
Section 6. Avoiding common trading scams. Red flags for beginners. Because you're brand new to this space, you are a prime target right now. There are predatory traps waiting for eager, inexperienced beginners all over the internet, and we need to shine a massive spotlight on them. So here's a rapid-fire checklist of absolute do-nots. Avoid any get-rich-quick promises at all costs. Specifically, watch out for random Telegram or WhatsApp tips from anonymous so-called gurus. Run far, far away from any guaranteed return schemes. We already established that guaranteed money in trading is a total myth, right? Also, avoid leverage trading entirely as a beginner. Using leverage without experience is quite literally like handing the keys of a Formula One race car to a teenager who just got their learner's permit. It is going to end in a crash. And finally, just ignore people selling sure-shot trading signals. Memorize these red flags, and the moment you see them, walk the other way. So, where does all this preparation actually lead? When you are old enough and when you are fully educated, you must use a properly regulated broker. This is how you eventually get to participate for real. You don't use some shady offshore app. You use an established, heavily regulated financial entity that complies with the law to hold your money safely. That right there is the true finish line for your beginner preparation phase. Let's look at the big picture and quickly summarize this entire journey map we just covered. If your goal is figuring out how to eventually navigate the stock market, here is your logical progression. You start at point 1, absolute zero. Then you learn point 2, stocks and charts. That's your required technical syllabus. You move to point 3, paper trading, so you can practice safely in a sandbox. You strictly apply point 4, risk management. And finally, only when you are of age and truly ready, you arrive at point 5, opening an account with a regulated broker using only money you can comfortably afford to lose. So, I leave you with this. Are you actually ready to learn from absolute zero? Put in the grueling time to study the technical vocabulary and practice safely in a simulator? Or are you secretly just trying to get rich quick? Be completely honest with yourself, because I promise you, the market is going to figure it out either way. Thank you so much for joining me for this explainer today. Take this roadmap, start your learning journey safely, and I'll see you next time.